Good evening, folks. This is Andy Pedraza with Special Effects Academy, and we're on the start of the week session for the Forex trading room on December 15th of 2019. We will be reviewing our usual agenda, a look at the prior week, our currency strength meter, past 7 and 30 days, calendar of announcements up this week, a look at the major pairs on the daily charts, any setups we see in progress, and a few words in conclusion. We'll start with the ledgers. Long-term ledger, not a whole lot of change. We did get taken out of the Euro New Zealand short at profit of about 200 pips, and we jumped right back in, and we're carrying profit once more as it looks like the Euro New Zealand is continuing down after a very brief retracement back to the trend line. We'll take a look at that when we look at that specific chart. The intermediate term ledger fared less wonderfully, I should say. So we did have a drawdown on the intermediate on the back of the UK elections, but at the same time, we did jump back in with multiple pound trades as the retracement started, and we're now carrying a tidy bit of profit on those trades. So the recovery is well underhand to bring us back to where we were and hopefully beyond. Also, a long-running order that we had on the books would finally trigger on Friday. So that would be the only non-UK election-related trade that went in. Euro dollar was a re-entry as well, and also predicated partly on the UK election, partly on the Chinese US trade war settlement that happened last week as well. So that was bullish for the dollar in general, though we'll see that the dollar is not reacting across the board in the same way, but we'll get to that when we get to that. Euro dollar is carrying profit as well at this point. So all of them, I think even the Aussie JPY are carrying some profit. We do have some older trades open. From Euro CAD, I think is our oldest trade, USD JPY, USD CAD, Euro Swiss. Most of these are either at profit or at break even. So it seems we've cleared the deck of losers and and last but not least, the short-term ledger tab setback this week is again the market. Probably we should not have traded the short-term account last week given everything that was going on, but live and learn. We live, we learn. So we did have another drawdown on this account, and well, that's what it is. I'll be making another commentary on this in the next slide. So for improvement, as we saw a conservative landslide win in the UK. And on that note, Brexit may credibly happen as early as January 31st of next year. That is the current plan out of the Boris Johnson administration. The pound strengthened right after the first results were released and then backslid right after. And we did catch pretty much most of the backsliding. So we went in at top, writing it down. It's been open for about an hour, and that is continuing. There has been no increased pound strength since the market opened today. We had to draw down on the short-term and intermediate last week, as I mentioned, but we're well into recovery at this point on the intermediate. We will be reassessing our short-term approach over year-end, so we'll take advantage of the quiet period towards the end of the year to obviously, we've had a drawdown. It's really the only account that has any significant drawdown right now. So we're going into repair mode on that account effective the beginning of the year. This will be the last week of live trading here in the Forex trading room for the year. So as of Friday, we will have no more live sessions until early next year. That doesn't mean we'll not be trading. I will, well, pretty much I'll stop trading when I'm dead. So I will be trading. So any trades that are placed will, of course, go out through the copy trader. So as long as you've got that set up, you will not be missing anything. And a repeat from last week, we have set dates for our live event next year. Going to be at the end of April, first day of May in Wilkes-Barre, Pennsylvania. And all the details are on the website right now. And that on our relative strength meter, our RSM for the last 30 days and the last 7. So let's start with the last 30 days. We can see that the pound has been the clear winner in the currency charts, and that was a result not only of the slow, gradual strengthening of the pound as we drew closer to the election, but the immediate aftermath of the election also bounced the pound up by about 2%. It later gave up about 1% of those gains, so it ended the week better than it started, but not as good as it had attained early Friday. But nonetheless, the pound was one of 2 clear bullish currencies for the month. The other one was the Kiwi, the New Zealand dollar, also fared pretty well. Losers were the yen and the dollar for the most. And I should probably say that the Aussie was a winner as well, but the Aussie didn't move as much as the others did. So while the Aussie ended up bullish against everybody except the pound and the Kiwi, it didn't move that much against all the others. Clear loser, as I said, the yen, followed by the dollar, and the CAD, the Swiss, the euro were pretty much middle of the pack for the month. The metals also moved. The silver pretty much went down against everybody, but not that down. It wasn't a crushing rout. And same thing with gold. It Hey, folks, apologies for that. Looks like we had a bit of a internet blip here at the mansion. I'll be resuming the presentation. Okay, so if I recall where I was saying that the yen was the clear loser for the week, the pound the clear winner just based on the election results. And as I was saying, I don't see the election results as being positive for the pound by any stretch of the imagination. Either way, the election would have ended should have been negative for the pound, but the market will react the way the market reacts. In this case, it did react into pound strength. I think as soon as that reaction really overextended, the market realized this and started moving back down. And again, we took advantage of that retracement across the board. I think we entered three or four trades in that direction, and they're all carrying profits. So that will probably continue. I see the idea of Brexit happening. Well, the election added stability to the UK. There's no denying that. At least now they have a path forward. That path forward is still pretty much into the abyss. So Brexit is going to happen. Brexit is still going to be a major. I don't like to say it that way, but you can't hide. It's going to be a major catastrophe for the UK. There's nothing really good that's going to come out of Brexit for at least the next 5 years while everything gets rebuilt around the new status quo of the UK standing on its own. So I would expect long term that the pound is going to suffer as a result before it comes back. The UK is not going anywhere. So the UK will come out of this, but it's going to take it a few years to actually come out the other side looking good, assuming that even happens. Either way, they're not going anywhere. They'll still be viable as a country, but it's going to take a lot of effort and pain to disassociate from the EU and rebuild itself as a completely independent country. That is going to make the pound suffer. So there is no bullishness for the pound the way I'm reading the cards. Of course, I could be wrong, but that is my best analysis of this. Other than that, other than the yen and the pound, we can see that the kiwi and the dollar didn't fare too well, though the dollar did stage somewhat of a recovery towards the end of the week. The other currencies, the euro, the Swiss, the Aussie, were pretty middle of the pack. I guess the CAD we can say had a good week, other than against the pound, understandably, since the pound was just skyrocketing Thursday into Friday. So that's where we are with our relative strength meter. Moving on to the calendar for the week, we've got a pretty heavy calendar, but not a whole lot that we're going to be actively trading from the 20 or so, probably more than 20 announcements that are there. We've got the Reserve Bank of Australia meeting minutes tomorrow night. So we will be trading that live. It's at 7:30, so we'll be opening up the trading room slightly earlier tomorrow to accommodate that. And well, that's that for tomorrow. So we'll combine that with our regular evening trading. Wednesday, we're going to have the employment numbers also out of Australia, and same thing. We will be opening up the trading room early to accommodate that. Then we have later on in the evening the Bank of Japan interest rate decision, assuming the Bank of Japan keeps to that schedule. We'll be checking the calendar before then to try to confirm, but we will be trading that one live as well. It will be the last interest rate decision out of Japan for the year. And same thing Thursday morning, very early, 7 a.m. U.S. Eastern Time, the Bank of England's last interest rate decision for the year. I might have skipped this one, but it's so close to the election that you got to track it and see what's going on there. Last time we did have a couple of votes for a vote cut coming out of the ministers that have that responsibility, and there is a forecast that it will be unanimous for no change this time. Sometimes it's not the fact that the vote changes or not with the Bank of England, but how the votes fall. If we see that there is a break from that unanimous vote and there are a significant number of MPs voting for a cut, even if the cut doesn't happen, that will still move the market. And of course, the pound is on very shaky territory right after the election with the retrace already playing out. So this could be a good fundamental to trade. Moving on to our charts, commodities, we can see that oil had a devastating Friday. So it dropped about $3, actually about $2 in one go on Friday, and went all the way back to the bottom of that slowly rising channel it's currently in. It hasn't touched the top or the bottom of the channel marked by the two trend lines in quite a while, but it has been bouncing between them quite consistently. It's now near the bottom of the range, also the bottom of the Ichimoku cloud, where, of course, either one of these, either the trend line or the bottom of the cloud, should act as support. Indeed, the bottom of the cloud already did act as support on Friday as it bounced towards the end of the day off of it. So we'll see how oil continues playing out throughout the end of the year. There's a lot of uncertainty around oil with the Aramco IPO and the quotas being set by OPEC. So obviously, this has been playing out with a little bit of a wild swings in oil price as a result. In the currencies, the euro dollar, and this is probably partly indicative of the agreement between China and the US for trade, as well as the retracement from the UK election. We saw that the euro spiked against the dollar, but on Friday it gave up a lot of ground and ended up really close to the prior level of support. So we'll see if it continues heading down this week. There is good news for the dollar, as I mentioned, with that trade resolution with China. And that, of course, is a major economic fundamental event, whatever you want to call it. It should provide strength to the dollar. So we'll see if the dollar ends up winning against the euro this week or not. We are in a short, and I think we're either at profit or no, we are at profit. We got out of a bad trade on the euro, and now we're carrying profit on this new entry. Pound dollar, of course, we're going to see this in all the pound pairs, that huge spike on the announcement of a conservative landslide, and then the retracement about halfway back throughout Friday. We didn't trade the pound dollar itself, but we traded a few other pound pairs, which we'll look at when we get to those charts. But this one might be a candidate for a trade this week. We'll see how that plays out. USD JPY is back towards the top, towards resistance. We still need it to break further up and take us towards the trend line, but this trade is, I think, either back at profit or at break even on the intermediate. We are trading this one up. In general, it's still very sideways, but it keeps attacking that level of resistance, which is a good thing since we need it to go higher. USD CAD, we're trading it down, and it's now providing some profit. It tried to spike on Friday, but failed, and continued heading down. So have to see how it starts out the week, but we're still bearish on this one. We're still in that bearish trade, and I'm still happy with that trade. We're trying to trade it to the very bottom of the chart, perhaps even deeper. USD Swiss took us out of a trade last week or the week before when we were trying to trade it back up the channel. It's done a breakout. It's come out of support, but it's finding another level of support right underneath. So it's in no man's land right now. We'll be observing it, but we probably will not be trading it until it does pick a direction again. Aussie dollar, we're short on this one, if I'm not mistaken. We're something on this one. Either way, I think we're pretty close to break even on it right now. We did have a nice drop on Friday towards the line of support. Yeah, I think we're short on this one, and we're trying to trade it down to the underlying level of support near the bottom. So no change to this one. It seems to be back in play. Kiwi dollar, and this one we are trading it up. We're trading the breakout, and it's also carrying either a little bit of profit or at break even. So Aussie dollar and Kiwi dollar, I think we're trading in opposite directions, and they're both actually still looking good. Aussie Canadian, this one we're always trading it down, and it looks like it came back to. So we had some nice moves on Friday out of both the Aussie and the CAD pairs, and this, of course, combined both of them. So we're back in business with this one as well. It is still in a nicely bearish pattern overall. Euro Swiss, I think we got out of this trade, or we may have jumped back in. I forget. Don't quote me on it. But either way, if we're trading it, we're trading it down. And looks like Friday was a really good day for that. I don't see this one breaking the level of resistance at the 110.50, which it hasn't broken since sometime back in June. So this is a pretty safe short. The euro is not doing well. The Swiss is also having its issues, but is more bullish than not. So we will probably get some good traction out of this pair eventually. Euro pound is one of the ones we re-enter, or rather entered on Friday after the bounce, and it's the slowest mover. We are carrying profit, but I think less than 30 pips at this point. It really hasn't moved much. That's because the euro was weakening at the same time the pound did on Friday, so it didn't move a whole lot. They're still fighting it out, so there's no way of knowing which will win the fight, the euro or the pound. I've placed my bet on the pound weakening more, so we are trying to trade this one up at this point. We'll see how that works out, but we're leaving that in place. Euro JPY, it spiked. It took us out of a trade, and I'm not looking for a re-entry until I see it heading down or heading up. So far, it has been stopped by the trend line acting as resistance, and it's now at the underlying level of support right beneath that trend line. So we'll have to wait this one out. Next, Euro Canadian, and this is one where I think we still have a short open, probably at break even. We're waiting for it to break that trend line and continue heading down. The good news is that support, resistance, has been holding, so it is refusing to go further up. And again, sometimes these just need time to play out. Pound JPY, we entered this one and we are at profit. We got in pretty close to the top when the retrace started, and then Friday gave us a nice bit of a move there. It's still very near the top, still a long ways to go. I would be happy even if we're just looking at a test of the cloud or a test of that trend line, that rising trend line from the bottom. Either one of those two will already give us a nice chunk of profit. If it goes deeper, that's just a bonus. Next is our Aussie JPY, and this was triggered. So we had a pending order. It did get triggered on Friday on that drop, and we'll have to see if it does have the strength to continue going down. For now, we're in that trade, and if it's carrying profit, it's not carrying a lot. Euro New Zealand, we got taken out last week in the long-term account on a very successful short. We picked up about 200 pips, and then we re-entered once it bounced off that trend line, and we're now carrying a small amount of profit again. We are looking, of course, for it to break that outer trend line and keep going. So far, it is looking good. Pound Canadian, we did not enter this one, but we probably will at some point. The CAD was just acting a little bit too erratically. But as with all the other pound pairs, it spiked after the election and then a retrace halfway back down on Friday. And last but not least, the pound Swiss, where we see the exact same thing, the spike on Thursday, the retrace on Friday. And we did enter this one, and we are carrying profit on this trade. And that brings us to the end of our charts. Now we'll look at some setups in progress. The UK, of course, the massive conservative victory in the UK elections. That is going to be the news of the month. Brexit is now almost a certainty. Sorry, with the earliest it can happen being January 31st of next year. The pound overextended itself into strength on the initial results of the election and is now retracing. The dollar is going in both directions depending on which currency we compare it to, but it is bullish across the board pretty much on the Chinese trade settlement. There are a few pairs that are going in the opposite direction, but I would consider these an opportunity to actually place a trade at a better position. So we'll be looking at that as the week begins. The CAD still looking bullish but slowing down. So it might be taking a breather for the end of the year. Not sure yet. We'll have to keep an eye on it, but I am still looking at Canadian strength, so CAD bullishness across most of the other pairs, and we'll be trading that accordingly. The Swiss is roller coasting right now, so it is going in both directions depending on the pair, as is probably natural given that it is a safe haven currency, and the British economy seems to not know which direction they're going in. So that is probably putting a pause on the yen and a pause on the Swiss until all that gets squared away. Last but not least, the euro. I still consider the euro to be weak across the board, and I don't see anything happening that will make the euro stronger. So my inclination will be to trade the euro down, with the possible exception of the euro pound, where I think the pound is going to weaken a lot more faster than the euro. And our parting words here, obviously we just finished a heavy fundamental week. Fundamentals do rule the market in the short term. So never forget that whenever you have a fundamental week, that is going to be the flavor of the week. Nothing else is going to matter. And that is probably what makes short-term trading a challenge. And again, why we're reassessing the way we're operating on the short-term account. I don't pretend to know everything or be the supreme expert or any other nonsense like that. I'm just another trader who's maybe been at it for a few more years than you guys. So I've got a little bit more experience and I've seen these things before. I'm not perfect. No trader is perfect. So sometimes you have to just admit that something is going wrong and reassess and see how you're going to fix it. That is what we'll be doing with a short-term account. It's not meant as false humility or anything like that. It's just the way trading works. Nothing is ever going to be perfect. Longer-term trading, however, is a lot easier to manage. That doesn't mean it's easy. It's a lot easier. You saw the intermediate term account have a drawdown last week, and by Friday, we had recovered a good chunk of that. Why? Because long-term trading is a lot more forgiving. Even if a fundamental goes against you, long-term trading has, in general, wider stop losses. You can stick to the trade and still come out ahead in the long run. With short-term trading, you don't have that advantage. Short-term trading, your stops are much closer. You're going to be taken out a lot sooner, and then you're going to be scrambling. So different styles of trading, different strengths, different weaknesses. But in long-term trading, even your steep downturns are relatively simple to address if know what you're doing, and provided, of course, that you're still around to address them. In other words, don't run out of money, which brings us back to my favorite topic of risk control. But we said a whole lot about risk control in the past few weeks, so I'm going to let that one go. But ultimately, you need to park your emotions by the door and trade. I see a lot of traders trying to chase the market after a loss or even after a win. Continue to operate based on your systems and trade. Don't pay attention to the money going up, the money going down. That is short-term thinking. It's irrelevant. Pay attention to your longer-term results. That's going to be the end of my session for today. Any comments or questions from anyone? Okay, then thank you very much. And we will be back tomorrow slightly earlier. Remember, we have a fundy tomorrow, so check the calendar on the email for the times of our call tomorrow. Have a good one, guys. Take care.